हेलो, वेलकम बैक टू zen स्टडी। सो एडिटोरियल में बहुत रिसेंटली इट वाज presented about digital public infrastructure, and the writer was Amitabh Kant, who was a Sherpa for G20। और ये आइडिया इतना इम्पोर्टेंट इसीलिए है बिकॉज डिजिटल पब्लिक इंफ्रास्ट्रक्चर हैज इम्प्रूव्ड ease of living for our citizen, and it has been offered to various countries across the world, and especially the low income developing countries of Africa. So Amitabh Kant has mentioned 5 sutras for digital infrastructure. So we'll know what are the 5 sutras, or we will know how the India stack or India's digital public infrastructure has been created. What are the features? What are the benefits, overall benefits of the this infrastructure that has the capability of inculcating a government, citizen, and businesses onto the system for ease of doing business and ease of living. So in the first paragraph itself, he has mentioned that the achievement of India of achieving 80% financial inclusion has been achieved in a very short duration since 2017. That essentially means is हम लोग के कंट्री में बहुत सारे लोग अनबैंक थे एंड दे वर नॉट कनेक्टेड टू द फिनेंशियल सेक्टर ऑफ द इकोनॉमी. So they were out of the financial system, so they can't keep their money in the banks. They don't had the access to banking facilities that the nation has to offer, and they were not able to access the credit facility that the economy or the financial institution has to offer. So most of the people were out of the financial system, so we were not able to provide them the capital needed for improving their life condition, improving their businesses, and taking financial decisions for themselves. They were solely dependent on the government initiative for their welfare. Because as we know, for any individual's development, capital is one of the major requirements. So if we leave out a certain percentage of our population from financial inclusion, all the financial sector of the economy, that then it would entail that group of people won't be able to access capital and can't improve upon their lives because of the dearth of capital that they would need. Now after the initiative of Jan Dhan, Aadhaar, and mobile, and the penetration of mobile services across the country, introduction of 4G and 5G, these three are called as JM, Jan Dhan, Aadhaar, and mobile, that has initiated and built upon the financial inclusion for the country and for the unbanked citizen, unbanked areas of our country. So after the initiation of this scheme or this policy, we have achieved 80% of financial inclusion of India. So it has been a very momentous occasion or the momentous policy, because in this short duration, no country on the planet has achieved such a tremendous financial inclusion at such a short time. That shows that the whole policy was implemented very diligently, and the underlying infrastructure of the electronic infrastructure that was built to sustain the unbanked population was resilient enough to accumulate, to accept all the citizens that were unbanked, and also it offered connect between fintech companies to connecting with the prospective customers, those who were unbanked up till this point. So after last year, we had the G20's presidency. In G20's presidency, this was highlighted that India achieved a tremendous growth in financial inclusion, and India displayed its prowess regarding technical capabilities that it had to offer for the world. And the whole infrastructure, the whole knowledge was open to the world, so that the underdeveloped countries or those countries that they are needed of the infrastructure or the know-how can directly copy these features or emulate the similar features of the system in their own country and improve upon the overall governance of their country. So in G20's presidency of India, it was offered to the world so that it can be changed according to the needs of the citizen of that country, and so that they can improve upon the financial inclusion and overall governance of the country. So, what are the challenges that we had regarding connecting government, citizen, and the private players of the economy, specifically in financial measures? So, first is we have a huge population, and lot of the people and lot of the region in the country was mostly unbanked and untouched by the financial sector. And even after a very large number of people were connected, but they were not able to access the modern day financial services that private players were offering, because there was no technology that would connect the customer and the creditor or the banking services that the company has to provide. To maintain this, a huge infrastructure was required, because in simple terms, if each bank would have created its own payment systems, and any fintech company or any financial instrument had to be created standalone for its own company, there was a chances that each company would create a separate infrastructure and it would charge a certain amount for the maintenance of that system, and it would be very cumbersome for the citizen to use that system, because it won't allow other people from other institutions, financial institution, to access the same infrastructure that any X company or any financial institution that had built for itself. So for creating a digital infrastructure, it was needed. But since we have a huge population and huge number of financial institutions, the infrastructure required was extremely huge, and it was not cost efficient, and it was not logical. For each company, building a separate infrastructure was very costly, and it was not convenient for ordinary citizen who wanted to transfer his or her services or the institution of his or her choice. So it would be inconvenient, it would have been very costly if each company would have to build its own separate infrastructure, digital infrastructure, for providing the services to the customers. Now, if in case any company has built a certain infrastructure, digital infrastructure, for any financial or insurance or any banking needs, so if that company fails, the system would be intact and it could not be accessed to the new user, or for each new entrant into the system, or new company had to build a new system or create an entirely new infrastructure for the same purpose. So it would not have been cost efficient if every company would have to build a new infrastructure for the same service. So the problem was solved by India Stack. So it has basically three layers: identity layer, payment layer, and data layer. That essentially means is, in this layer we have identity of billions of citizens of our country. So it gives a resident, it has Aadhaar, KYC, and features that would assign a specific identity to each user or each citizen. Then next is payment layer. Now identity layer and the financial details like bank account were connected in this layer, in the payments layer. Now at the payments layer, any new enterprise can just connect to this layer like Paytm and PhonePe, and they would be separated from a financial institution as bank, and here will be the financial service provider, Paytm, PhonePe, whatever it may be, and the identity of an individual will be very separate, and that allowed we don't have to give the identity of each user to the either to the bank or the financial service provider. That would allow that the identity of the user is kept intact, and any payment layer, any company who wants to provide financial services to any of its consumer, it has just to link itself to the payments layer. So this allowed a very convenient way of anyone building its own infrastructure and linking that specific infrastructure to the payments layer, any of the specific layer that it wants to have connect with depending on the need of the customer. Now here is the data layer. What are the data points that the data layer have? So it has account aggregators and DigiLocker. Account aggregator has features such as it accumulates all your bills, all your account details, or your financial transaction, and keep it as a instrument that could be traded or it could not be traded specifically. It could be shared depending on your need, the individual's need. So account aggregator takes a financial data, and it would ask you for your permission if you need specific loan, or it will entail the credit value of the user that can be shared to any company that has to issue the credit. It can share the account details and the account transaction to that creditor, and easily you can access the credit facility of any given institution. That whole system allows multiple players in the same system. It shields customer from the financial corporation, and it allows very convenient transaction and sharing of data based on the permission given by the original user. Now the whole system is purely based on tech delivery. There was a time then when all the financial transaction was based on a ledger, based on physical evidence of transfer of money, transfer of any sort of instrument such as insurance papers or anything that has physical value, and it was written or put down on a piece of paper. Now all these things have gone digital, and this allows the whole financial system in our country to be entirely digital, having no physical proof. You need not to have any physical proof or any physical paper to prove your identity or prove your ownership of a specific financial instrument. So what are the benefits of any tech-based delivery? It is cheaper and more efficient. Now it is just not about the financial instrument. It is all about the benefits that government gives to the certain section of the people that needs welfare initiatives for their benefit or say improvement in their quality of life. Like for example, the identity layer here and payment layer here can be accessed by the government itself to verify when it is sending scholarships, pension, or any financial incentive or financial support to any specific category of citizen of our country. So whole system is not just for financial inclusion, but it has also been a tool to transfer benefits from the government to the citizen. Now tech-based delivery, it is much more cheaper and much more efficient. You don't have to travel to your bank to get your pension. You don't have to travel to the bank to get your scholarship. It is always and completely delivered digitally, and it is cheaper and much more efficient. Tech is more reliable because every time you need to change your service provider, like if you want to change your insurance company, you will have to put down your insurance papers to the company and buy a new one by writing an application and going so on and so forth. But this thing has removed all the obstacles. You can change your insurance policy, you can change your financial service provider like instantaneously without physically going to a company's office. It is much easier to upkeep because any physical infrastructure has to spend a certain amount to maintenance. But since it is digital and the government has to maintain these three layers, and all the other companies that are giving the services, they have to maintain their own layer. So it is very cheaper to maintain these layers by the government itself. Now, the one of the best features that this India stack has to offer is any number of new players, new services, new products can be integrated on this layer, any of these layers, depending on the financial services or any other service that the company is providing. So you can accommodate any number of players or very different types of players. Now we'll get to know, like we got to know what is India stack. Now we'll talk about some basic things. Why do we need it? The first and foremost is, like any infrastructure, for example, if you want to, if government has built a school or any because schools are built by a specific ministry, like Ministry of Education or Ministry of Human Resource in any state. So if you think in this fashion, like for access for every school, you have to build a new road. It will be very inconvenient to build, and it will be very inconvenient to use the facilities that government have provided. Government provided schools, hospitals, and the roads. So the same road would lead to the hospital and the school, and all these three things is provided by the government. So on the same basis, government or the technocrats have built this single facility so that you can access all the services that the government and the financial institutions have to offer. You don't have to build a new road or new infrastructure for accessing the same thing from a different user. So now, since the arrival of direct benefit transfer, it has allowed that almost all public services that was accessed physically now could be delivered digitally, and it has saved, improved upon the governance and saved a lot of public money that was lost on because of corruption in the system. Now, when we talk about, we got to know all the stacks and what the layers. Now, in a very technical aspect, the India stack is a set of open APIs and digital public goods. That essentially means is this interface is open for all. Any new individual, any new company could write a code and get linked to this, any of these layers. So it is open application interface, and that allows that anyone can access based on the need of the user and based on the need of the market, and it improves upon the financial sector of the country, because we had a very small percentage of GDP, financial sectors being a very small percent of GDP, and it has the potential, because India is a very large country and it has immense potential to improve upon its percentage with respect to GDP. And we needed this layer so that new financial instruments were created and it would propel the, the GDP of the country. So one of the aim that Amitabh sir determines or entails, writes about is, the aim is to unlock the economic primitives of identity, data, and payments at population scale. Population scale, that essentially means is, if we are building a system of for 1.4 billion of people, that means any smaller countries can accept the same system and work upon the same system, because if the system has been is working for 1.4 billion people, that's the most populous country in the planet, then this system can work for any number of people, which could be much lower than India. So what he means about economic primitives of identity, that what he means is, we really don't know what is the economic value of any data, personal data, especially financial data, or maybe health data, maybe educational data. For example, it is projected that based on a credit, based on your marks scored in exams, or the credit you garnered during your education institution, your career as a student, you can be attributed that a specific amount of education loan can be accessed by you at a much lower cost. If you go beyond a certain requirement of loan, then the interest rate could be higher. That shows that these data can be utilized based on the need of the user and what are the financial products that the financial institution that can create. So what he mentions is economic primitives of data. It is all about, we don't really know right now that what could be done with our data that individual generates over his lifetime, and any economic potential that the individual's data has should be exploited based on technology and based on fair market practices. That could be only created when we have a very decent regulator, and here the regulator is the technology itself. You just have to build a system, you just have to offer a financial services based on the data of an individual. Now, what are the features that he determines as a good DPI, digital public infrastructure? The first is, it has to harmonize security of data. It could be scalable. Security of data essentially means is the data that any individual has, his or her personal data, should be secure and should be used only based on the need of the individual. Scalability, it could be scaled to any higher number and it could be scaled in any way that would improve upon the financial instrument or the financial access of the last citizen. And inclusivity, as I always mentioned, last individual means that any system that includes the last person that that should be the part of the welfare system or the economic benefits of any economy. He should be inclusive in the DPI. Only then that DPI would be a good DPI. So any good DPI has to harmonize security of data, scalability of the system, and inclusivity, the last man or last person into the welfare system or giving the benefits to the last person. Now the 5 sutras that was the driving idea of this whole editorial was a citizen relationship, market and state, because we know that in this stack, that this whole stack was created by the government. So government has created this system and we have put on our individual data in the different layers. Now this system has to, if it the 5 sutras, one of the major sutras is citizens relationship with market and the state. Now all these personal data about finances, about insurance, about your scholarship have a certain value and it should be determined in good harmony or good measure that would entail citizens relationship with market and state, because these financial data was created on a government's platform or government created infrastructure. It could be the basis of giving financial services to any company, by a company to the citizen. So it will determine the relationship between all 3 entities in this system or overall the whole financial sector of our economy. Empowerment of individual and privacy. Privacy is one of the most talked about and repetitive idea that is very essential so that we can improve upon the governance, individual governance and governance of governance of relationship between the citizen, the final user, and the service provider, the financial service provider. So empowerment of the citizen, of the user, and importance of his privacy. Now the one of the major problem or the major thread that has been highlighted many a times, that there may be a situation or there may be a future where any system, any person would be removed from the system based on some issue that has not been resolved between the individual and the financial service provider. Now that was highlighted as lock-in. That essentially means you are locked out of the system and you can't access the facilities. So the five sutras is, no matter what the scenario is, the citizen should not be locked out of the system. That essentially means it should be lock-in should be prevented by the DPI structure. DPI structure should be in a certain fashion that no citizen would be out of the system itself. Now, since the technology improves upon drastically in a decade and even sometimes in 5 years, and the law based on that was created few years or few decades back does not catch up. So the whole regulation of this thing should be done by techno legal regulation or the experts that would set the rules for every entity in this system. And the whole system should encourage innovation by the private and public institutions. Like for example, Jan Dhan was majorly done as an incentive to bring about people into the financial system. But it showed that any sort of problem when any citizen is facing during COVID, we have seen this, any financial incentive or any financial support can be given out directly. A lot of Manrega, pension, and other scholarships are given through these systems or through various bank institutions. That has shown that these innovations occur on a public sector or a public front. Now, after coming of fintech companies, we have seen a lot of insurance companies coming into India and doing their business. This is all because new financial institutions or financial instruments are created by these financial institutions because they can reach out to their customers very quickly through these interfaces that was created as India Stack and DPI. So both of these sectors should actively innovate upon the services that they are offering to the ordinary citizen or the customer itself. So these are the five sutras regarding that is needed for any good DPI, and that will be all. Thank you very much.